Hi everyone, today's video will break down why Tesla looks bearish. Not just bearish, but a short setup. Yes, shorting Tesla. So not just turning cautious, we are looking to short it. In the next 1 to 2 months, Tesla stock could fall to $200. Yes, $200. Let's look at it from 3 angles: technical, fundamental, and news-driven. First, from a purely technical perspective, you will notice this. Tesla is at a key spot. This is Tesla's quarterly chart, right? 1 bar per quarter. Each bar represents 1 quarter. This one's about to close, Q2, and Q1 was a big drop. At this level, Tesla is forming what? A classic M-top pattern. That's what it looks like. A clear M-top. After this pattern forms, what usually follows a sell-off likely. This bullish candle here, this one, looks exactly like the current one. And what came after that? A major drop. So what's next now? Possibly another big drop. This level is risky, a big fall could follow. That's a quarterly view. Now let's check the monthly chart. Even more bearish on the monthly, even clearer. Look closely, it still has downside. This level could drop further because clearly it hasn't reversed this downtrend. It looks more like this period here. Maybe some sideways action, then down again. It won't crash instantly, the drop will take time. It might even do what? It might do something like this. Just like this, right? One small green candle, then a drop. Same pattern, small upstick first, then the decline begins. So here, whether the trend drops straight down or spiked before falling, doesn't matter. The main trend is what? Downward. That's a monthly chart. Now let's move on to Tesla's weekly chart. What do we see on the weekly chart? Weekly chart. Tesla is in a textbook pattern sideways then down. It's a pullback followed by a drop. At most, it might go sideways here. A little more consolidation, but then it continues dropping. So if you're still bullish on Tesla, it's probably time to stop. On the daily chart, look here. This recent drop wasn't expected. It came out of nowhere due to the fallout between Musk and President Trump. When that news broke, right around here, I turned bearish. From that area onward, I was bearish. Kept that bearish stance throughout, but I didn't expect this drop. Kept calling it lower, but didn't expect this kind of massive red candle. Originally, I expected a more gradual drop. If there hadn't been that dramatic news, it likely wouldn't have been a slow, grounding move down, a bit more sideways, then lower again. Gradually, step-by-step downtrend, eventually reaching the $200 level. But the news acted like a catalyst, a true catalyst causing what? A sudden plunge. And look, Tesla fell 17 points intraday. That's an intraday crash. Why did this kind of drop happen? Why did we see that intraday crash? Because of that news story. I won't go into the details, you all know it. That was an accelerator, a classic catalyst. This minor rebound, it won't change the overall trend, no impact on the big picture. This area here is still set to drop further. Yes, further downside ahead. As you see, it's already falling. It dropped even before the open. This zone might consolidate here a bit. Then it starts the next leg down. Then what? During that drop, could more surprises come? Is it possible another drama unfolds, like suddenly another fallout or controversy? I think the odds are low, very unlikely. You can't expect every drop to come with a dramatic news cycle. Most likely, the next move will look like a slow decline like this. gradually fading lower, down to a certain level, then a bounce, then another drop like this. So this coming segment will likely mirror this earlier section. Small red and green candles alternating, gradually sliding down. That's a more normal, healthy downtrend, unlike that violent drop we saw. Then someone might ask, what if there's a major positive catalyst at this point? Could that potentially trigger a breakout? Absolutely not. There's zero chance of that, let me be clear. Even if tomorrow Elon Musk announced he was marrying President Trump, the most we'd see is a gap up. At most, a gap up, maybe up 3 or 5%, then it would sell off right away, straight into the red. So at this point, you should realize just how powerful the downtrend pressure is. Now, Tesla, why has it entered such a state of decline? First, from a technical standpoint, what happens after big gains, there's a drop. Same logic, after big drops, there's usually a bounce, but clearly it hasn't dropped much yet, right? Exactly. So it hasn't fallen enough. Once it does, then a rebound will come naturally. So at this stage, why is Tesla dropping like this? Let's now analyze from a fundamental angle. Look at the basics. First, the biggest blow to Tesla's share price is its disastrous performance in the EU market. In the EU, the situation is basically a total failure. Number one, in the German market, the sales volume has plunged nearly 70%. A 70% drop, and this downward trend seems irreversible, very hard to recover from. Second, even in places like Norway or Sweden or Finland, sales are also declining rapidly. We're talking about drops of 30% to 50% across the board. If Tesla can stabilize its position in the EU market, its stock price will keep falling. It will keep dropping. Next point, Tesla's other major market is where? China. In the Chinese market, Tesla currently sells three main models: Model Y, Model 3, and Model S. The first two are their stronger performers, but they are now facing fierce competition from local brands such as NIO, Xiaomi, and Xpeng 2, and also Li Auto. Facing this level of competition, not to mention BYD, they are constantly eroding Tesla's market share. So now, unlike when Tesla first entered the market, it no longer dominates. It's no longer the sole leader. It's now operating in a nearly fully competitive environment. It's essentially a state of perfect competition. And in this market, Tesla no longer has any monopoly level technological advantage or any significant competitive edge. So this just doesn't work. Third, what challenges does Tesla face in the US? The challenge in the US is that Musk has fallen out with President Trump. They've had a fallout. And now Trump has ordered him to not only relocate his overseas assembly lines back to California or Texas, but also to bring parts manufacturing back to California or Texas. How is that even possible? This global supply chain divisions of labor has been built gradually since World War II. It was formed over time. This global trade and production system, even now with protectionism on the rise, trying to overhaul it quickly, especially within a single presidential term, just 3 years left, it's extremely difficult to pull off. In my view, it's nearly impossible, but even if it's not doable, Trump keeps using this policy to pressure and frustrate Tesla. Well, that means Tesla has lost crucial policy support. That makes things tough for the company. It's a real challenge for them. So the outlook for Tesla is now very concerning. Many people argue that it should be seen as an AI company, that it's launching new AI products. But in the AI race, Tesla is not the number one. In the AI company space, Tesla isn't the leader. Many people still bullish on Tesla, are more so out of admiration for Elon Musk, or even worship or personal sentiment. They buy his stock out of emotional loyalty. I also admire Elon Musk very much, but the stock price is the stock price. We have to be rational here. At this point, we should be bearish and even consider shorting. That's it for today. If you enjoy my content, please subscribe. Thank you.